Welcome to This Week in Money. I'm Jim Goddard. Today, Ross Clark from Chartworks will take a look at the action on the markets the past week. Ed Steer from EdSteerGoldandSilver.com will talk about how the gold and silver markets are being manipulated and whether anything will be done about it. He tells us what he believes gold and silver would be worth without that interference. Mike Shedlock from Mish's Global Economic Trend Analysis chats about whether high-tech jobs can replace those lost in retail and about how shopping habits are changing. Plus, right after the show, we'll have company showcase updates from American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. We'll talk to Ross Clark right after this.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Ross Clark. He's the CEO of Chartworks. Welcome back to the show, Ross.
Good to be with you, Jim.
It's been 1 year since Donald Trump was elected. He's taking all kinds of credit for the stock market going up.
Well,
Has he had that kind of an influence?
I think Yellen should be taking the one who's getting the credit for what's going on in the markets because, you know, here we are, 1 year from the election. We don't have one single piece of legislation that's of any significance that's found its way through the Senate or Congress. You've got a tax bill that looks now that is still in the midst of very heavy negotiations, clearly being pushed out to 2019 rather than even a 2018. So yeah, everything's still up in the air, and it's been the liquidity that has kept this market moving as much as anything. And just this week we saw the first real little hiccup in a while when it became apparent that the tax bill was going to have these changes built into it, that the credit spreads started to move. We see that the higher yield items, the junk and high yield ETFs versus the high grade the LQDs, or if you look at the government bonds, that those spreads on the interest rates have started to move out. And it's just looks like a small amount right now on a relative basis, but percentage-wise, we've moved enough in a short period of time. And one of the things we like to look for is not just at the absolute levels of indices and changes. You're looking for the percentage moves, especially when markets are overextended and you start to see changes. In this case, the Dow and S&P were up within 1 or 2% of all-time highs. The credit spreads have started to turn, and what we invariably see out of this is a decent correction in the marketplace. Not a dramatic one, but in maybe the 3 to 5% variety. And that's pretty much what looks to be the possibility as we move into the latter part of the year, maybe into January. And here we are. This is now 12 consecutive months as we move into middle of November, where we've had higher lows in the S&P. And we go all the way back to 1928 on the S&P chart. There's only one instance that went beyond this, and that was 14 months. The norm is that after you've done 8 months or more of consecutively higher lows, that you'll have a 1 month pullback with marginally lower low, and then be capable of moving higher again. So this one looks, when I see the credit spread starting to move and the overextended move that we've got here for the indices, a correction appears to be, as I say, the normal thing to look for. When we also look at the credit side of the equation, just on the yield curve, and that would be looking at government bonds, the front end of the curve versus the 20 or 30 years, that spread is down to the lowest levels that we've seen since 2007. And as long as the spread is continuing to move lower, that's that the yield curve is getting flatter. The markets have only had mild corrections historically, not big bear markets. If we start to see the yield curve pick up in levels, that would be a bigger cause for concern. But I think that's going to be more into sometime next year. It's not in the tail end of this year.
Your partner, Bob Hoy, today suggested that with all the indicators he's looking at, we might see a major correction just after the new year, which would kind of remind me of January 25th a few years ago.
Could be, if you are in a position where you've got a good capital gain, your preference would be to hold off until the first part of next year to bank that, because you're not going to have to pay taxes then for another full year. So you might as well hold off on any of your heavier selling until you get into next year, rather than having it come due in March or April of next year. So we've seen a number of markets historically top out around the end of the year. As I say, from my perspective, I don't think things are quite extended enough to look for a big bear market after this, but a correction as we move through the tail end of the year into next year would be fairly normal, and I think that we've got to be on the lookout for that.
Gold and silver miners underperforming bullion. What's happening there? Yeah,
we put out a piece here a couple of weeks ago pinpointing just how badly the miners are doing. They broke the September lows, while silver and gold managed to hold above their September lows. And then in the last couple of weeks here, we've had a bit of a bounce, but the miners can't get even back to those September lows they broke down from. And this is indicative of a number of other examples when we look back on that market, that we should end up seeing lower price levels both for the bullion and for the miners as we slide through here in the next couple of weeks. Wouldn't be at all surprised that you're seeing numbers maybe sub 1,200 as far as gold is concerned before a final bottom is in place. We've got comparisons that we took a look at, say basis the Dow in 1974 through 1977, coming off a major low, had a good advance and a big pullback before it was capable of then a much larger move to the upside. The same thing in terms of the gold and silver in further dates as we move closer to where we are today. So the norm, as I say, is a hard break. I think unless you see the GDX, the gold miners index, move up through 25, we're still going to be of a negative mindset as far as that sector is concerned for the next month or two.
Ross, you have some big plans for ChartWorks. Can you tell us what's going on there?
Yeah, we're looking to gear this up. I have published a lot of general information regarding markets, the bullion markets, the credit markets, and over the years. Now we'll be doing more specifics. We'll talk about maybe some specific stocks that have patterns that have potential in them. A recent example here a few weeks ago. We put out a piece on Disney looking for not just the seasonal turn, which has a very good track record, but also some of the sequential models that we look at that had really nice timing right at the middle of the month. And, here we are at the end of the week, a poor earnings number, but the stock is up nicely. These are the kind of things that we'll be looking for, and we will have various packages available depending upon how serious a person is regarding their how close they want to be to the markets, whether it's looking at it on a day-by-day, week-by-week basis, or just settling back and looking at the big overview of markets. So if any of the listeners want to contact me, they can do that at ross.clark@chartworks.ca.
Ross, thanks for being on This Week in Money.
Nice to meet you.
My guest has been Ross Clark, CEO of ChartWorks. Coming up, Ed Steer next on This Week in Money.
Always consult your investment professional before making any investment decision.
I'm Larry Reaugh, President and CEO of American Manganese, Inc., listed on the TSX Venture, ticker symbol AMY, A-M-Y, with proprietary patents in the U.S., China, and South Africa. Our focus is on recycling lithium-ion batteries for electric vehicles. China recently legislated the responsibility for recycling onto their electric vehicle manufacturers and importers. For more information, please visit AmericanManganeseInc.com or phone me, Larry Reaugh, at 778-574-4444.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's also a director of GATA, the Gold Antitrust Action Committee. He's speaking to us from Edmonton. Ed, welcome back to This Week in Money.
Always glad to be on your show, Jim.
Ed, geopolitical unrest is increasing day by day, yet gold and silver don't seem to care. Why?
Well, it's the same reason I gave you during the conversation we had this time last month, and that's the fact that in the COMEX futures market, there are 8 traders, all of them U.S. or foreign banks, that are short more than 50% of the entire open interest in gold and silver in the COMEX futures market. And they dictate the price, and they all trade in unison, so I don't care what's happening geopolitically. If they decide they want the price to go down, that's what's going to happen. It wants to rise, obviously, with all these geopolitical problems, plus all the economic and financial problems in the world. But if the banks don't want it to go up, it ain't going up.
What do you see ahead for gold?
Well, like I said, gold and silver should be at astronomical numbers by now already, and that should have happened years and years ago. But until the bullion banks and the governments decide they're going to let the prices rise, they're going to languish where they are today, which is most unfortunate because certainly the miners are suffering and the investors are suffering, and until that changes in the futures market, nothing's going to change regarding the price.
Is it the same story for silver?
Oh, exactly the same, except it's far worse in silver, where the short position on the COMEX futures market is. I think the 8 traders are short something like 200 and some days of world silver production. The short position in silver is just off the charts. It's so incredibly bad, and it's far worse than it is in gold.
Well, wasn't there a court finding or some kind of hearing that found that silver was being manipulated on the London market?
Oh, absolutely. I mean, Nova Scotia's admitted to it. Let's see, Deutsche Bank has admitted to it. It's the litany of woes that the banks have committed against the precious metals in general, and silver in particular is well known everywhere in the blogosphere right now. The miners know it, the investors know it, but until the CFTC, which controls these sorts of things and is the one that gives out the discipline, decides they're going to move against Scotiabank and JP Morgan, nothing's going to happen. It's going to be the same old regardless.
Well, if we look at past penalties to banks for other wrongdoing, even if they are found at fault, they'll be fined a few $1 million and business will go on as usual.
Well, that's entirely true, but if they're told to cease and desist from going short the next rally in the COMEX futures market and any of the precious metals, then of course we're going to see silver and gold prices at astronomical numbers. And that wouldn't be good for all things paper. That includes the stock markets, the bond markets, and the currency markets. So they'll continue until they're told to cease and desist. And the sooner that happens, the better, as far as everybody's concerned.
Do you think banks will continue to do things that are illegal until some banking official who's high up ends up in jail?
Well, when some banking official ends up in jail, it'll be the news of the world because so far they've all managed to avoid it. So until that day happens, or like I said, they're told to cease and desist, everything will continue as it is right now.
If there is finally some movement here, is silver likely to have a higher percentage move than gold?
No, absolutely. There's no question about that, because the short position in silver is orders of magnitude larger than it is in gold. And J.P. Morgan is the ringleader. It wouldn't surprise me at all if silver was allowed to trade freely, that it would be some very large three-digit silver price before the smoke all cleared.
Do the gold and silver markets have cycles that could help in making predictions?
I'll tell you what. There's seasonal supply and demand, and there's Diwali in India, which just was over in the last 2 weeks of October. There's high demand in India at that time. There's high demand in China around their Chinese New Year. There's high demand in North America around Christmas time. So certainly there are seasonal factors involved, but that's sort of been masked by the fact that the price has been controlled, regardless of what the seasonal factors, positive or negative. As long as the price is being managed in the COMEX futures market, the seasonality really doesn't account for a thing.
Have gold and silver ever been in a bull market at the same time as the U.S. dollar?
Most certainly, and we've seen the dollar rising and gold rising in tandem at exactly the same time on several occasions. But, I hate to sound like a broken record. The dollar could be doing anything it wants, but it's what happens in the COMEX futures market that matters. The dollar index, to give you an example, between January 1st and the end of September, the dollar index fell 1,200 basis points, but gold was only up $100. So if you're telling me that gold can fall, gold should rise on a falling dollar, it certainly should, and it should certainly rise more than that. And can it rise on a rising dollar? Absolutely. It all depends what's going on in the COMEX futures market. Like I said, it all depends what the bullion banks do, regardless of what the currency markets are doing.
So what's new in the manipulation of gold and silver?
Not a thing. It's still the same as it was a month ago, a year ago, 10 years ago, 20 years ago. The price management scheme, if not, is probably even more concentrated now than it was. The 8 or less traders in the COMEX futures market are short astronomical amounts of precious metals. And their grip just keeps getting tighter and tighter and more concentrated all the time. So sooner or later this is going to come to a head, because it can't continue forever. But for the moment, it's the same old, same old.
Canada and the UK sold off their gold reserves, while Russia and China seem to be buying every ounce of gold they can find. Who's making the best decision here?
Oh, there's no question about it. The Russians and the Chinese, and of course all of the Indian buyers who are buying all the gold they can get. These are the rich countries that insist on being poor. And I think Canada and the UK sold off the gold because they were asked to sell it off. And one of these days the West is going to wake up and find itself poor, and the countries that have gold are going to be extremely well off. What's that old saying? It says the golden rule, he who has the gold makes the rules. That day hasn't come yet, but it certainly will in the future.
How are the commitment of traders' numbers trending for gold and silver?
Well, they're pretty ugly, actually, and they've been ugly now for many, many months. And it's been like that since, the worst was the best was in July, and of course it's been deteriorating since. And I know that talking with Ted Butler, who's the real authority on all this, that the big 8 traders have been trying to cover their short positions in the last couple of months and has had a devil of a time, because everybody else is wise to the game now and is betting against them. So they're much faster traders, and the short position still exists, and they're just not able to reduce their short positions, and I don't know what they're going to do before this is all over. But right now the commitment of traders report is not pretty for any of the precious metals.
Is physical gold and silver selling?
Retail market in North America, it's just terrible. There's just nothing going on. You can ask anybody in the retail trade, and if they're honest with you, they'll tell you that the market is the worst they've ever seen it, and I'm talking about the last 5, 10, 15, 20 years. It's never been this bad. In other places like India or China or and especially in Germany, the retail market is doing extremely well. But here in North America, everybody's chasing the FANG stocks, Facebook and Amazon and all these other companies. It's a wild paper. It's a bull market in everything paper and a bear market in everything physical at the moment, which is most unfortunate.
Ed, do you have any take on the cryptocurrency mania that's taking place right now? Some have suggested money that would have gone into gold is going into cryptocurrencies instead.
Well, there certainly is some truth to that. There's no question about it. Some people have just, abandoned the precious metals altogether and gone that route. But every time somebody brings up the word cryptocurrency, I think of fields of tulips waving in the wind, and just acres and acres of these things, because what we're looking at here is a mania of biblical proportions, because there really isn't anything backing this thing. It's just an electronic hallucination. And one of these days, the world will come to discover that, and the people who get out early are going to be ones that make the money, but everybody else is going to crash and burn, just like in the tulip mania back in the 1700s in Holland.
Yes, and also with cryptocurrencies, if you know anything about algorithms and blockchain, you can create your own. Wouldn't that be the same as printing your own money?
Well, it's basically what it is. I mean, there's so many cryptocurrencies out there. There's, 50, 100, or I don't know how many there are. It's just that Bitcoin is the most well-known, and of course that's getting all the attention. But they're all in the same category of basically supposed value out of thin air.
Why do you think people would risk cryptocurrency, which could disappear overnight if, say, you accidentally threw out your hard drive? Why take that risk when, at least with gold, you have a physical asset?
Well, a lot of people out there are just in it for the money. It's pure and simple. They're just chasing the fast buck. Whatever is going up is what they're buying, and they don't look at the risks involved. They just want to take the chance and see if they can make some money out of whatever is rising, and the cryptocurrencies are no different.
What do you see ahead for the gold and silver markets, the majors, the mid-caps, and the juniors?
Well, as far as the shares go, they pretty much follow what the precious metal prices are doing, and until, like I said, until things change in the COMEX futures market, we're going to continue to see prices of the mining stocks languish where they are today. It's really sad, and it's unfortunate the mining industry, who knows all about this price management scheme by now, just won't do anything about it. But until things change in the COMEX futures market, like I keep saying, nothing's going to change anywhere.
Are people discouraged from getting into gold and silver because they feel the market is so overly manipulated?
Well, most people who are in the market now know that the price is rigged, and most people who are outside the market don't know about it at all and don't care. I think they'll only care once they see gold and silver rising like they should be doing, and then they'll all abandon Bitcoin and Amazon and all these other stocks and go chase physical assets like precious metals in particular and commodities in general. And that's the reason that the prices are being controlled, because the powers that be in the world know perfectly well the moment they stop suppressing everything physical and abandon things that are all paper, that we'll see gold and silver prices soar to the moon, and everything paper, stock markets, bond markets, and currencies crash and burn. And that's the real reason why the prices are being suppressed, so they can keep this paper game going around the world. It's the biggest Ponzi scheme the world has ever seen in its history.
Why do you think so little attention has been paid to it?
Paid to what?
Well, paid to this manipulation. Or is it because the markets in general are manipulated?
Well, all the markets are manipulated. There's no question about it. I mean, you take a look at the Dow or the bond market. I mean, the fact that the central banks of the world are buying every bond that comes out, whether it be a government bond or large portions, swaths of the private sector bond market, they're just buying everything they can just to keep interest rates low. Because the fact is that most governments and financial institutions are so up to their eyeballs in debt that any rise in interest rates would basically make them insolvent in a heartbeat. So this is what they've been fighting hammer and tong at for, more than 20 years now. And it's a battle they're ultimately going to lose, but until they do lose it, the precious metal prices are going to continue to languish.
We'll have more with Ed Steer next on This Week in Money.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead zinc silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineer gold mine in the Atlan district of northwestern BC. Check us out at blindcreekresources.com.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. We're speaking with Ed Steer, founder of EdSteerGoldandSilver.com. He's speaking to us from Edmonton. Ed, if the Middle East causes oil to move over $100 a barrel, are gold and silver likely to follow?
Oh, there's no question about it. $100 barrel oil means the fact that somebody's dropped a big bomb somewhere in Saudi Arabia right in the middle of their oil facilities, or the oil facilities of some other Middle East nation. Once the next war gets started, which now appears to be centered on Lebanon, there's no question about it that the oil fields will suffer to a certain extent, and they'll be the primary target of all this. And if you see oil at $100 a barrel, you're going to see gold probably back at its old highs, and silver at some rather large number. And I would think that on the basis of that alone, we'll see the end of the price management scheme. So there's no question about it. We're going to see much higher prices in precious metals if oil's at $100 a barrel.
Saudi Arabia, we've heard there's been a mini coup there, and it might be related to the fact that they're going to have their first IPO for Aramco, the oil company they own. 5% of the shares there up for grabs, perhaps $100 billion worth. We've also heard through our sources in Asia that China would like to snap up the money that represents about 5% of their holdings. Is that good or bad news for the oil industry?
You know, I don't know much about the oil industry, but I can tell you right now that China has already already asked Saudi Arabia if they would be willing to sell them a certain chunk of their IPO when it does come out. And whether that's good for the oil industry or not, but right now prices are $57 a barrel or whatever the heck it is. And they're going to need something happen in the supply-demand chain, and a nice war in the Middle East where some production facilities get blown up would certainly be useful.
Of course, too, that would mean that Saudi Arabia would be trading oil in yuan instead of U.S. dollars. What does that do to the U.S. dollar and its relationship to the Canadian dollar? Well,
the yuan, trading oil for yuan by Saudi Arabia would certainly be a huge break for the U.S. Would be a huge negative for the U.S. dollar. There's no question about it. The U.S. dollar is already going down the drain, and there's another market that's being managed just like precious metals. The U.S. dollar would have crashed and burned a long time ago if what I call the gentle hands weren't in the market every day supporting it. So as far as I'm concerned, the U.S. dollar is already on its way out the door. It's just a matter of what the next step will be, and oil for yuan for Saudi Arabia would be a huge brick in the wall for the U.S. U.S. dollar would not be good for it at all.
Russia is creating the crypto ruble. Will other countries do that?
Well, the crypto ruble is an exception. I mean, it's the sort of thing that they're going to be using to trade within themselves. It's not going to be a regular cryptocurrency like, say, Bitcoin, where you can mine it and create extra units. It's just going to be a unit of trade where they're going to be able to the ruble itself, but it's not going to be a cryptocurrency per se like the rest of them.
Should Canadians be concerned about what appears to be slow progress in the NAFTA talks, and just in case they don't work out, extend more ties to Asia and Europe?
Well, NAFTA is nice, and it wouldn't surprise me at all if it gets revamped considerably. And as far as Canada is concerned, I mean, the United States is our physical neighbor. It only makes sense that most of our business will be done there. But there's no question about it that Canada should be diversifying its exports to as many countries as possible, and I'm sure that Canada's been doing that over the last 20 or 30 years. I certainly see signs of it everywhere. But it's hard to avoid the fact that the United States is our biggest trading partner, and that all you have to do is drive across the border with the goods. So as far as I'm concerned, if NAFTA goes down the drain, it really can't be good for Canada, but we haven't arrived at that stage, so I'm not going to speculate.
1 year after the election, is President Trump good or bad for gold and silver?
Well, I don't think it makes any difference what happens, who's president of the United States. I'm going to go back to the same thing I said right at the top of the program. It only matters what the traders, the big 8 traders, do in the COMEX futures market. I know on election night the gold and silver price ran up, but the moment the election was over, not only did the gold and silver get hammered lower, they got hammered down for a loss on the day. Plus the Dow futures, S&P futures, which were down, I don't know, huge negative amounts, came roaring back. So, like we discussed before, everything is manipulated. I don't care whether it's the dollar or the Dow or gold or silver. Everything out there is being managed these days. And whether, like I said, whether Donald Trump or whoever, what was the other woman's name, of Hillary Clinton, if she'd been elected, who knows what would have happened? It still wouldn't have made any difference.
Is the Trump administration likely to investigate the manipulators of gold and silver?
Probably not. The CFTC knows perfectly well what's going on. They've been petitioned thousands and thousands of times by different investors, including myself, about the management scheme. Ted Butler, who's been on this now for 30 plus years, has alerted them of what's going on. He sends out copies of his weekly newsletter to everybody at the CFTC. The director of enforcement knows about it. The new director of enforcement knows about it. And until the CFTC has the gonads to go to J.P. Morgan and say, look, that's the end of it, absolutely nothing's going to happen.
Ed, what is the Gold Antitrust Action Committee up to right now?
Well, basically, we're just keeping on what we've always been doing. We've been exposing what's going on regarding the management of the precious metals prices, gold and silver. And we have our own website, and Bill and Chris go and speak at conferences. I speak at conferences. I'm going to be speaking at the Vancouver Cambridge House Resource Conference in January, and we're all out there doing our own thing, making it as public knowledge as possible. But Jim, let's face it. I mean, everybody knows now that the precious metals markets are rigged, and we're just sort of preaching to the choir now. All it takes is somebody to actually do something about it, like the miners, for instance, or the CFTC. But everybody knows what's going on, so GATA's work is ongoing, and one of these days it will pay results and it will all end. But until that happens, GATA will continue, as Winston Churchill said, we'll just keep buggering on.
Ed, how can people find out more about the Ed Steer Gold and Silver business?
Well, if they wish to check out my website, it's edsteergoldandsilver.com, and I write 200 plus columns a year, one every business day. And if they're interested in checking out my website and seeing what my newsletter looks like, they're more than welcome to do that. And the subscription price is $100 US per year.
Ed, thank you so much for being on This Week in Money.
My pleasure.
My guest has been Ed Steer, founder of edsteergoldandsilver.com. He was speaking to us from Edmonton. Coming up, the editor of Mish's Global Economic Trend Analysis, Mish Shedlock, next on This Week in Money.
Lotus Ventures Inc. is a BC-based medical marijuana company poised to launch into the rapidly evolving cannabis sector. Lotus is in the final review stage of the Health Canada approvals to become a licensed producer, having arranged facility financing of up to $12 million, plus building permits for its prototype indoor production facility. Shares trade under the symbol J on the Canadian Securities Exchange. Visit our website at lotusventures.ca.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com. Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Rideout Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test the numerous targets located by recent groundwork will commence later this year. Please visit our website at rmroyalty.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/MishTalk. Welcome back to This Week in Money, Mish.
Pleasure to be back on, Jim.
Donald Trump in Asia. Are you holding out high hopes for him to accomplish much?
I don't hope out for anyone to accomplish much, especially Donald Trump. I think he's over there to make himself look good, and we'll see if anything comes out of it. Jim, I'd just rather doubt it.
Is retail in trouble in Canada, the U.S., and around the world?
I think retail's in trouble everywhere. We've overbuilt a number of stores on all fronts. I think it's one of the things that's been propelling jobs. Fast food restaurants going up everywhere, it seems. So, meanwhile, big box department stores are kind of closing. We're in a death of a mall situation, kind of. I think there's a number of things that are just all coming together here right at once. And the hurricane impact has skewed a lot of that. We've seen a lot of ordering for cars to replace millions of cars that were damaged in the hurricanes. And so it appears the economy is doing a lot better than what it is. I dispute that.
What effect are the internet and technology having on bricks and mortar retail?
Well, Amazon for sure. If you look at the number of jobs going up in the non-store retail space, it's pretty huge percentage-wise, but it doesn't replace the jobs that are actually being lost by the big box retailers that are going out. I mean, they've got all this merchandise in stores. They've got huge allocation of space. People need to man that space. They need to fill it with goods. So we got a lot of shipping and trucking and restocking type of jobs and efforts going on in those stores, compared to a lot of this online stuff is fully automated, and some of it actually goes back to the retailer for them to ship, and Amazon just kind of gets credit for it, takes their slice out of the pie. Millennials, I think, and even older people just don't like to go out and shop. If you can get it online and you're an Amazon Prime member, which I am, you can get unlimited numbers of orders sent to your house for one flat fee. Seems like a pretty good deal to me.
Are more jobs being lost in retail than being gained in the technology sector?
Right now it's hard to say we're even losing jobs. We're adding 100,000 jobs a month, or 114,000 if you average the last 2 months together.
So we had negative 33,000 2 months ago, which was definitely a hurricane impact. But the rebound was also a hurricane impact, just the reverse. Take the 2 months together, 114,000. And if you just follow the trends here in jobs, it's just down and down and down. The number of people not working, dropping out of the labor force, et cetera, is really quite significant in terms of numbers of people who aren't working, whether they're counted as unemployed or not. Most of them aren't, and that's why the unemployment rate is as low as it is. There's a lot of structural unemployment here that's just not counted that way. So the stock market is vulnerable here. The junk bond market is actually showing signs of rolling over. If the junk bond market rolls over, it's going to eventually impact, probably sooner rather than later, the entire equity market.
Are more and more retailers in jeopardy?
I think so. I mean, just look at, Sears. Is it going to even survive? In what form? I'm waiting for the restaurant business to start rolling over, and minimum wages have gone up. A number of states have mandated that. I mean, look, the price of fast food is absolutely insane. What this stuff costs, and we'll see. But we're in stock market bubble. We're in a junk bond market bubble. They've reblown the housing bubble, and meanwhile, all of this stuff, everyone is expecting almost these nirvana conditions, low volatility conditions, to last for something like forever. I've thought this for a long time, but I'm even more convinced now. We're almost at the end of how far this can go, especially with central banks globally now all talking, and the IMF talking that the economy is strong and they're going to raise interest rates. Well, they really should have started raising rates 3 or 4 years ago. I think they're going to be undoing these rates in next year.
How tough is it for retailers to get credit?
I think that depends on what they want it for, and actually, what their metrics are and stuff. Some companies that wanted to go private have been unable to get the funding to do that. The bank wanted 13% interest rate, which is, in this kind of environment, really quite amazing. But private equity was able to get funding, to go in and take over all these little companies, load them up with debt, of course, pay out all the investors, and ultimately watch these companies sink. I think that's what happened to Sears twice, and we're going to see more and more of that kind of thing, and I just get the feeling here we're on the verge of something, and you look at events in China and North Korea, now the Mideast here now with oil prices back up at, we're nowhere near where we were, but oil prices are up substantially since the beginning of the year. So all of this and rising gas prices is eventually going to weigh on the minds of consumer. And consumer spending was pretty solid the last couple of months, but again, this is a hurricane impact. People had various repairs they do, and this all came from savings. It didn't come from wage growth.
Are the habits of millennials changing the way goods are produced and sold?
I think they already have. And it's not just millennials, it's the other end of the extreme. Retiring boomers don't like to go out as much and shop as much. They'd rather order from their own homes. So I think we're going to see that I don't know, that maybe a little bit too early for this, but the death of the big mall is coming. And so there's a lot of space out there, and what's going to happen to it at what prices, and how do they get these stores filled? I think the Fed's going to have a really difficult time in this. This is a very deflationary environment with junk bonds and pension plans and everyone counting on that, and to a certain extent, spending is high because the stock market is high. I think a lot of things are going to start to happen once we get a major correction in the stock market, and I think we're close to one here.
Is the automobile market the canary in the coal mine warning for the economy?
Well, they were a lot of places were, touting the bump in auto sales here. Ford called it, and you have to laugh at this term, a high plateau, as if we're going to keep selling the same number of cars for something like forever. Well, we're not. A number of things are we had the hurricane replacement because millions of cars were damaged in the hurricanes. That's just artificially upping up the statistics, and we're going to head back down. The trend prior to the hurricanes was for lower and lower car sales every month. I think we're going to go back to that. So to the extent that they've ramped up manufacturing, to the extent the economic indicators look good, because the hurricanes destroyed cars, it's all craziness. This cannot be good for the economy in the long run, and yet that's what the president of the New York Fed, William Dudley, said. Hurricanes are going to have a positive impact on the economy. Well, if that's true, then why is Puerto Rico doing so bad? So it's crazy talk to think that way, but that's the way a lot of people view it.
Is the growth of electric vehicles likely to cause dislocation in the automobile market?
I think that there's going to be a dislocation, all right, in the automobile market. It's going to be a combination of electric and self-driving vehicles. The demand to own cars, I think, is going to plunge. But that's not going to be this year or next year. We're talking about something that I think is more like a 22 to 24, 2022 to a 2024 time frame. However, for trucks, as soon as the transportation authorities allow self-driving trucks on the interstates, within a year of that, we're going to see a huge percentage, if not a majority, of trucks on the highway being self-driven. Now, those are millions of jobs that are going to vanish, and I don't see what's going to replace them. Over time, the economy adds jobs. Mainly, that's a function of population growth. So we'll see, Jim, but they're very deflationary trends. And of course, truck technology in general is deflationary. The pension plan blow up, the burden on millennials to pay higher and higher taxes just to support inane public pensions that some of these people are getting that are retiring now, all very deflationary.
Are the credit markets tightening up?
I think they are by some metrics. By other metrics, no. They're trying to disguise it in China, and we've got toggle bonds and all kinds of other crazy things. But just look at the performance of junk bonds over the last month or so. And I'm going to do a post on that later this afternoon. You get the indication that there's a credit event, or at least concerns over a credit event, starting to filter in. And once the junk bond market goes, equities are going to go with it.
When banks start tightening credit, is it a signal of the economy turning down, or is it the cause of the economy turning down?
Probably more so the performer. We are what? The expansion started in 2009. It's 2017. This expansion has been very, very long-lived, and it's also been very weak. And we are seeing rise in delinquencies on credit cards. So all that's going to filter through in terms of the willingness of banks to extend credit. The junk bond market acting that way is the same thing. These are signs that something is happening. And if we are at the end of this cycle, then one can expect these kinds of things to continue for actually quite some time until the next recession and sometime in it. And then we'll get to see, Jim, how the Fed's going to react to this. Because I think the next major move in interest rates is actually low.
Does the Dow always turn down 6 months or so in advance of a recession?
I don't think the Dow predicts anything. The stock market doesn't predict anything. I've done posts on this before, Jim, and a 20% correction, they happen all the time without the economy going into recession. So it doesn't predict anything. It's simply a measure of the exuberance of investors. That said, if there is a recession, stocks are going to turn down. You just can't look at stocks and say it predicts anything per se.
We're hearing some predicting the Dow going to 40,000. Could the Trump tax cuts cause that to happen if the tax cuts actually happen?
No. Will the tax cuts happen? I suspect, actually, they will work something out in Congress. There's competing plans there now, one from the House, one from the Senate. The House plan cannot pass the Senate because of Senate budget rules, would require 60 votes for passage, because the House plan increases the deficit over a 10-year period. So there's an attempt to get around that by literally ignoring some stuff and claiming that growth is going to be higher. But if the Congressional Budget Office, which is actually nonpartisan, comes out with an assessment that this is going to increase the deficit, well, then we're not going to get the tax cuts, at least in the current form. We're certainly not going to get them in the form that's currently sitting in the U.S. House right now. So can they reconcile out all these differences? But then what is it going to look like when we're done, Jim? The House plan had 4 tax brackets. The Senate one has 7. You know, they're offering breaks back in for after reducing the amount of mortgage insurance that can be mortgage interest that can be declared. Now the House just today put automobile payment interest back in there. We're not talking about reform anymore. We're almost just tinkering around the edges. It's going to create some winners and some losers. And as it sits, it looks like it's going to increase the deficit here now. The question is by how much. No one wants to tackle the real issue, which is just out of control government.
How many financial bubbles are you currently watching?
Well, there's a lot of them. The equity bubble, the junk bond bubble. I think housing is back in a bubble. Certainly, there's a Bitcoin bubble going on. The whole implosion of the cryptocurrency space out there. There's hundreds of cryptocurrencies now, whereas we just started with one. Someone sent me an email just moments ago. This person is launching their own. I'm looking at the details. I don't even understand it. It's just craziness. Certainly, we've had excesses with toggle bonds. Junk bonds in Europe are trading. This is an amazing stat. Trading with an implied loss of negative 1%. In other words, they're priced such that there can be no defaults at all in European junk bonds. We know this is craziness. And the Swiss National Bank is one of the largest owners of Amazon. Things are going crazy over in Japan. We've got debt bubbles in China. It's property bubbles in Australia that might be bursting here now. Certainly property bubbles in Canada. There's almost too many bubbles to count, but just in general, equities and junk bonds are the two big ones there.
Can the Fed and the central banks inflate their way out of those bubbles?
No, they've actually increased the bubble. They can't inflate the way out of them. Bubbles by definition burst. So it's going to be a very deflationary thing when this happens. So all that they have done here is blown another bubble that's going to deflate. I think we're going to see real price deflation in terms of consumer goods when the next bubble bursts. That's what they were trying to prevent. They're going to bring it on.
Is commercial and residential real estate at risk of a downturn?
Yeah, for all the reasons we've just talked about here. I mean, how many more of these stores do we really need? And Sears at the moment is one of the poster childs for this, but
Mish, just to let you know, here in Canada, Sears has already declared bankruptcy, so that's probably what you might see in the U.S. You're right.
Yeah, it's going to happen. Just a whole number of things are just all slated to happen here at once, and actually none of it is any good. So we've seen these kind of conditions before, and we see GDP dip down, below 1% or so a couple times, only to come rebounding, and it happened again this time because of hurricanes. But one of these times it's not going to rebound, and it's going to catch everyone by surprise when it happens. And I pretty much think that time is very close at hand right now.
If interest rates continue to rise, how will decreasing or stagnant incomes be able to service the debts?
Well, I don't think interest rates going to rise. And I've said this actually for a long time. I'm actually surprised they've got as many hikes in as they have, but we're not really talking about a lot of hikes here. We're still talking about interest rates here at 1%. Okay, so the Fed's going to get in one more. I think the one in December is going to be the last one. That'll be 3 for this year. I didn't think they'd get 3 in this year. I thought 2 at most, but they're going to get one more in, and then we'll see. But I think the next major move is not what people are expecting. I think the next major move in interest rates is back down, and we're probably going to be heading back down towards 0% again at some point in 2018.
Canada has a tax and spend liberal government. Will the Canadian economy get hit harder than the U.S. in any downturn?
Canada usually gets hit really hard in a U.S. downturn. I don't see that being any different this time. Certainly you've got bigger property bubbles than the U.S. has, and Australia, the same situation. Some of this depends on really what happens in China. If China starts slowing, not that anyone believes its GDP numbers right now. I certainly don't, around 6% or something. But if Chinese growth slows to, even as little as 4%, which means that it's really probably closer to 0, the knock-on effects throughout the emerging markets, and even the knock-on effects in places like the U.S., Canada, and and Mexico is going to be pretty severe.
What do you like better as a store of wealth, gold and silver or cryptocurrencies?
Well, I have no cryptocurrencies, and actually someone gave me 1/10 of one a number of years ago. I guess it's now worth $600 or something. But I don't even know if I've got the keys to that thing anymore. I'd have to go back and look. So this might my 1/10 of a Bitcoin might go to the Bitcoin heaven, which is what happens when you lose your key. I'm not worried about it actually. Gold has been the store of value. Gold has been the world's currency whenever it's been by free market choice for thousands of years. Bitcoin has been around, a decade, So the blockchain coin technology itself is an excellent technology, has lots of uses, but one needs to separate the technology from the coin. As a store of value, we're going to see it's certainly volatile here, if nothing else. It wouldn't surprise me to see Bitcoin back at $300, not in the least, and not a prediction, but it wouldn't surprise me. And you're playing right now with Bitcoin. You're playing a greater fool's game. There's no real reason to have that, regardless of what one thinks of the technology.
Mish, could you tell us a bit about Mish's global economic trend analysis?
Well, I've moved over from mishtalk.com. I'm now on the maven.net/mishtalk. The reason why I moved, I had to give up control, and I didn't like that. But the reason why I moved is the founders of the Maven. I think they understand social media. The founders come from very high up in Google, Yahoo, and places like that. They're entrepreneurs that have started successful publishing businesses before. I just decided I wanted to get in on it, even though I had to give up a lot of control. Now, with any case, anytime you move, people don't like the layout change. It happened when I moved from Blogger over to Mishtalk, and now it's happened again. So there's a traffic hit whenever you make a change. But I like the publishing team over there, which is my main reason for going. My main drawback in going is giving up some of the control I had for doing things myself. But I'm convinced the team they have over at the Maven knows how to market, understands mobile, both of those two things better than I do or can do on my own.
Well, Mish, humans are such contrarians. We like new things, but we hate change.
That's correct, Jim. That's exactly right.
Thank you so much for being on This Week in Money.
It's a pleasure to be on.
My guest has been Mish Shedlock, editor of Mish's Global Economic Trend Analysis on maven.net/mishtalk. And that wraps up our show for this week. We'd like to thank our guests Ross Clark, Ed Steer, and Mish Shedlock. Plus, at the end of the show, we'll have company showcase updates with American Manganese CEO Larry Reaugh and Aben Resources President Jim Pettit. If you have any questions for the show, you can email us at info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, President and CEO of American Manganese. Welcome back to the show, Larry.
Glad to be here, Jim.
Larry, I understand you've got some big patent news for us.
Yeah, we put out the release that we filed for our full patents in the U.S., and that's a real milestone for the company. That's the second time we've done this. The first time was with the manganese patent, and all that work and money that went into that, and it was several millions of dollars, certainly is paying off today in developing a patent for recycling lithium-ion batteries and recovering the material. And I'd like just to go into a little bit of detail about what that all means for our shareholders. The patent application covers us off, protects us in a couple of hundred countries, I believe, and we are probably the first company out there that has applied for a full patent for recycling of LIB batteries. Now, that's important in itself, but the thing that we have to realize about this is when we talk about our patent, we're talking about over $1 million spent to recover 100% of the cathode metals. And those cathode metals are lithium, cobalt, nickel, manganese, and aluminum. Now that's 100% recovery. I've seen other companies that are talking about much lesser percentages or just one product only, and they certainly haven't reached the patent stage that we have. As a matter of fact, I don't think most of them have even filed for a patent. Now, that said and done, what does 100% recovery mean? And one thing that I should point out is we now can claim 100% recovery of lithium. It used to be 92%, but now it's 100%. So that's a big step forward. So now we're at 100% of everything, which makes it easy for me to figure out, for sure. But the important part about this is when you're talking about 100% recovery, you're talking about no waste stream. If you're only talking about 90%, 80%, somewhere in that range recoveries, then you've got a waste stream. So you don't have a real environmentally friendly, green, closed-loop process because you've got waste that has to be dealt with. We don't. We get 100% of it back. Now that's a big plus over mining material. You never get 100% of the mining material. Mining, the ores and mining. So you have to remember, we're starting with 100% purity materials to start with. So, it's a lot of work, but you can, and we have gotten 100% of that back. So going forward, if you're a EV company or a battery manufacturing company and you claim that you're all green and that everything you do helps the environment, it's not quite true if you're not recycling the batteries, if you're not getting 100% of the materials. When I say materials, a 1,000-pound battery has a skin, which has aluminum, stainless steel. The harnesses for the batteries themselves consist of copper and plastics and all kinds of other ingredients that go into a battery. Those are easily recyclable because they can be dismantled and sent to a recycling yard that specializes in that. The thing that we focus on is the battery itself, the cells, which could be 9,000 or 12,000 cells per battery. And so we're concerned about the battery, and we're concerned about disassembling that battery. As a matter of fact, we are beginning to look into the disassembly of the batteries, and that'll be part of our focus in the coming year, because we want to automate that system robotically so that we can get the foils out so that we can treat them, not only for the cathode material, but we'd also want to work at getting the anode material back. Price of graphite's been going up, so it's becoming, again, we don't want to put anything back into the environment. Although graphite is a fuel itself, so if you burnt it, you wouldn't be adding that much detrimental stuff to the CO2 gases to the environment, but we think we can get the anode material back. What else does the patents tell us? Well, it tells us that there are ways that we can increase profitability, increase the conservation of water, decrease the use of the reagents, etc., etc., etc. So we'll be looking at other patents to file in the next coming year. And that is improvements to the technology. So this is a real milestone for the company. You can remember, here's the first company out there to apply for a full patent for recycling LIBs. And I'm sure that the automobile companies will be interested in what we're doing. For example, I've talked about the scraps before, and, I've talked about 10% scraps, but that number fluctuates. It could be 5 to 10, somewhere in that range. And, but even so, that's a lot of scrap material to start with. So when we commercialize a plant, we'll build it to the specifications of what we can get on hand. People ask the question, well, how are you going to get them to give it to you? Well, I think first off, the battery manufacturer, the EV company itself, are looking at ways to decrease costs in their batteries, and certainly having to pay a $3 per pound tipping fee for a scrapyard to take it takes away from the bottom line. We could take that for nothing. Maybe we could even pay for it. But, we don't have the economics on that, but we'd certainly be able to take it for nothing. You look at the value of these batteries, again, I keep coming back to that subject. We're looking at even the lithium cobalt aluminum battery, which has got the lowest value of cathode materials or metals. But that value is still $1,700 a battery, or $3,400 to $3,500 a ton. And if we had that in an ore body, we'd be leaping over the moon. So mining batteries has a lot of logistics to it that beats out mining ore. And that is that you have much smaller plants because your feedstock is very concentrated, so you've got much smaller plants, less capital intensive, nothing going back into the environment. Permits should be very easy to obtain. You can go into an industrial park in a city, set these things up. So when you start looking at the advantages that are out there, they're tremendous. The disadvantage, the perception is that there's going to be second use in batteries. I don't see that as ever really getting off the ground. Sure, you can have second use in some of the facilities that you use, but why would you tie up valuable cathode material when you can use less or cheaper cathode materials to build a brand new wall unit? So this patent really is a turning point for the company. And is that going to bring people to our door? I believe it will. I mean, they won't ignore us forever. And we're starting to see more write-ups, more interest from some of the mainstream out there. And I think that's only going to increase. And I think the shareholders are going to benefit very greatly from that. So what's that mean? That means that the trading like today, where you get a huge block of stock knocking the price down, perhaps that wasn't an investor. That was somebody else with another agenda. Anyway, we'll eventually reach our goals. We'll eventually increase the market cap. Certainly, the value of our technology is much more than our existing market cap. And we're proud to be the leaders in this. So I say to my shareholders, have a great long weekend. I know the market's open, but our offices will be closed. and but have a great long weekend, knowing that the project has been significantly de-risked. You know, we're covered with the patent. We know we can get 100% of the material back. We're very optimistic that the pilot plant will prove out as we expect it will. And I think I'd like to extend a great deal of thanks to the scientists and the CEO of Cametco. They've worked hard and they're very proud of this achievement. They know a disruptive technology when they see one.
Larry, for new listeners, can you maybe explain the process that American Manganese has helped develop? And I understand it recovers cobalt, a very rare and very expensive metal.
Yes, it does. It's a hydrometallurgical process that we have borrowed from our existing manganese patent, certain aspects of it. And you know that patent has a history since the Second World War with the U.S. Bureau of Mines. We're the ones that were able to, with Cametco again, back in 2010, we were able to get the manganese out of very low-grade ores at a cost similar to China. And that was another milestone for the company. So now we've adapted some of the new technologies to the existing patent to get out the cathode metals, and that includes cobalt. We'll get 100% of the cobalt. In a lithium cobalt battery, Tesla's lithium cobalt battery, each battery has about $6,000 worth of cathode material, and the majority of that is cobalt. And cobalt's in very short supply, and it's going to get shorter. So, you know, we'll be, eventually, could become a major producer of cobalt.
Where is your company traded and under what symbols?
We're traded on the Toronto Stock Exchange Venture under the ticker symbol AMY. We're traded in the U.S., ticker symbol AMYZF. Frankfurt, ticker symbol 2M. Our website is AmericanManganeseInc.com. You can contact the company, me directly at LREAUGH@AMYMN.com. Or you can give me a phone call at 778-574-4444.
Larry, thanks for the update.
You're very welcome.
I've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. We were speaking on November 10th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Jim Pettit, CEO and President of Aben Resources. Welcome back to the show, Jim.
Thank you very much.
Aben has just received news on its final 5 holes. What kind of news did you receive?
Well, the results that we've been waiting on came back, and they're actually very good. The final 5 holes came in. Basically the hole 4 and 5 are they're part of what we put out a month and a half ago or so. That hole 4 started. So the 3 of them go together off of one pad, and what we've defined there is quite a very large, broad zone of mineralization, like over 100 meters, with a high-grade core. Hole 5 in this particular case that we just announced came out with a very broad zone of 1.2 grams gold. It actually had good values of copper, but that was over 122 meters. The high-grade core of that was 21.5 grams gold, 28.5 grams silver, and 3.1% copper, over 6 meters. Excuse me. That's very good. And hole 6 was a broad zone over 94 meters. Had lower grades than that, but they go along with the hole 4 from our first news release a month and a half or so ago, which was a very broad zone over 385 or 386 meters. So what we've got is a very large, continuous mineralized zone. It's got a substantial width. Had we known about this, like if we had gotten our assays even a month ago, we'd still be there probably drilling. But the fact of the matter is the assays took so long, in this case, because the labs are super backed up. But, and that is the nature of the beast with exploration. You have a drill plan, you lay it out, and away you go. If we had assays back, we would probably thought twice about drilling holes 7, 8, and 9 further to the south. We would have stayed in this zone and chased it. Given all that, we now have our work cut out for us for next year, because we could probably go in there and drill another 20 holes just in that zone. What we do know also is through the boundary zone in general has about 2 kilometers in length of really highly anomalous soil samples, gold in soil and copper in soil samples, and there's some really good targets there that we want to get to next year as well. But for the time being, we now have what we would consider a pretty significant discovery, and it will require significant amount of work next year. Next year we'll be able to get in earlier because we have our permits in place, and probably stay later because we'll put a bigger plan in place. So for the time being, the markets are, we've now hit tax loss selling time, and I don't know if the markets are really paying attention to anything more up in the Golden Triangle because pretty much everybody's finished work. But, we also have plans for this winter. We've got another project we're going to be drilling in late January into February when it's good and frozen up near Silver Standard's project. They bought the Claude Resource mine. We're just to the south of them on the same structure. That project's drill ready, permitted and drill ready, so we'll be in there in probably early February. And then early in the year, as early as possible, we want to get up into the Justin because we've got some results coming in on some trenching work we've done this past winter or this past summer, and they look really good. So we've got our work cut out for us.
Where exactly is all that exploration taking place?
Well, what we just reported was the Forest Curve project, which is in the Golden Triangle, right in the heart of it. The drilling we'll be doing in the new year is in Saskatchewan. That's called the Chico project. Saskatchewan's a great place to work. That's the area we'll be working in is, it's like working in the Athabasca Basin. It's better to work in the winter. Everything will be frozen. And then the Justin project is up in the Yukon, right next to Golden Predator. We're actually tied right onto them.
Jim, is there anything else you wanted to tell us about Aben?
No, it's sitting pretty right now. The stock's a little bit depressed because of it. I suspect it's because of the end of the season up in the Golden Triangle. And it traded millions and millions of shares during the program. And now it's settling back down. Now we're right into tax loss season. So I think right now it's probably a really good buy.
Can you tell us where Aben is traded?
Where it's traded on the Toronto Stock Exchange, the Venture Exchange under ABN, the OTC pink sheets in the United States, ABNAF, and in Frankfurt, E2L2.
And where can people find out more information about Aben? You
can go to the website, abenresources.com. You can contact us here at the office, Don Myers, 1-800-567-8181.
Jim, thanks for the update.
Anytime, thanks.
My guest has been Jim Pettit, CEO and President of Aben Resources. I'm Jim Goddard. We were speaking on November 7th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.